Hello, welcome back, guys. And in this video, we will look at technical analysis. But in the last video, we left, I think, some section on the trading terminal, the types of orders. So, like in the previous videos, I was talking about like why there's a need to invest and what are the regulatory bodies, intermediaries in the market, like how brokers connect to, the system and how exactly the trades take place. But now let's look at what are the type of orders that exist in the market, like how you can punch orders and make financial. If you have some kind of knowledge, you have a view that okay, this is going to go up or this is going to go down. Now, how to execute this view? So I'll go straight to Alice Blue and for example, okay, this is 3:45. Market has been closed, so I can't do anything now. But for example, Reliance. I want to buy Reliance and look at this very carefully. What is the first type of order that you see in the, like, forget about the PPT. We'll look at this directly. Okay. So here it is written MIS. What MIS is? Intraday. So usually we get 5x leverage on intraday trades. What intraday trades means is that you can buy and sell the security on the same day. And you like for example, the Reliance share is the price of the Reliance share is 3,100 rupees right now. Okay. So, but the required margin for this trade to get executed at market. What does this market means? The market means that this is going to buy a Reliance share at market price. So whatever is the market price right now, it is going to execute this trade. So this requires a margin of 640 rupees. Okay, so you can so if Reliance share moves up and down, so you can make financial gain on your capital invested, 640 rupees. Okay. Another type of order that exists is you can see cash and carry, right? Here it is written margin intraday square of MIS. It is for intraday. Intraday same buying selling. Okay, CNC cash and carry. So this is for long term and it requires upfront full margin. Like this Alice Blue has people has also given a detail of it. So 3,108 rupees it requires me, like I can just punch it, but obviously it will come as a reject. So this trade is open. I think okay. So this is CNC order. So tomorrow it's going to. I think hopefully tomorrow it'll punch. Again, I'll just come to what I was saying. Reliance. I'll go for either you can add this like in your stock watch list, Anna. But what I was trying to say, so MIS we understood, CNC we understood. Now what are all of this? So market you understood that it will execute the trade at market price. So between 9:15 and 3:30, if you order any kind of market, if you punch any kind of market order, it would automatically fulfill if there's enough liquidity on that particular stock or index. Okay. Now comes limit. So you can actually you can specify at what price you want to buy a particular thing. For example, this share it's trading at 3,100 8 rupees. I can just specify 3,100. Oh, and I can put a limit order as well. So when this price goes to 3,100, actually tomorrow I'll try to shoot the video in the market hour so that I can show you live that how we execute all of this trade. But for now, just understand this that I can just like the word itself limit. I can set the price and I can execute the trade at a limit price. So 3,100 if I want to execute. So it is only board lot. Sorry, what was it? Cancel. Only board lot market orders are allowed in closing session. Okay, so right now it's the closing session. At 4 o'clock, the closing session will end. So the like I think this is not allowed, but this was allowed. Okay. Again, yes. So this is about limit order. Now we'll look at SLM. So for example, you bought a share, okay, and buy it at market price, but you want to set a certain stop loss. So there comes SLM order. So you can just, it will automatically buy this particular Reliance share at the market price, and you can limit the trigger price that, okay, if it goes to 3100, I want to sell this share. Yeah. So automatically you don't have to look into the order book and see, okay, I'm making loss or profit into this trade, but because you can specify in the same order type that this is his SLM order, buy at market price with stop loss, and buy at a preferred price with stop loss. So this is, you are setting the price also, at what price you want to buy. So I want to buy, for example, the Reliance share is at 300 and 3110 rupees, but I want to exit it when it comes at 3100. So that is called SL order. So I think I'm clear with all of this. And one more type of order that we can place is bracket order. So bracket order, what gives us a privilege is you can set a target price, you can set a stop loss price, you can set the price you want to buy that particular thing. So I'll just show you what I meant. So at price 300 3110, I want to buy this particular share, and I want to put a stop loss when, in this particular thing, you have to put a stop loss in the number of points. So you can just specify that, okay, if it loses the 10 points, I'll just exit the trade. Okay. And at a target, I want to set a target of 20 rupees. 3110, I'll buy the share at 20, 3130. I'll, as soon as it reaches that 3130 level, I'll exit that share. So I'm thinking that, okay, the price is going to go up, but there can be chance that it may go down. So I want to, reduce my risk, and by putting a stop loss, I can reduce that risk. And trailing SL is like, actually it's just advanced, whatever I'm telling. So trailing SL is when, for example, you have set a stop loss of 10 rupees. So when this 3110 goes to 3100, it will exit the trade. But for example, it goes to, and I set a stop loss of 5 rupees. है ना? So when it reaches at 3115, the stop loss will directly be placed at 3105. So it will increase the stop, like it will reduce our losses because it has already moved up, and it is trailing. The stop loss is continuously changing as as the price is going up. As it is going in as the trade is going into our direction, the stop loss is getting reduced. And for example, if it goes, the straight up 50 rupees up, no, we have set a target of 20. So let's assume that the trade went 15 rupees up. 3125 is the stock price right now. And so the stop loss, so because of this trailing thing, the stop loss would, now the stop loss will be just 10 points after that. So the price at which this trade will exit is 3115. So if you understood whatever I meant, but I'll show you in live market how all of these things work. Coming back to the topic, these are the type of orders that I mentioned. Market orders, it will hit at market price. Limit order, at pre-specified price, it can hit the orders. Stop orders at triggered at a specific price to become a market order. So the trigger price you would see, it will trigger at a particular price, and it will become a market order. Stop loss limit orders, so it trigger at a specific price to become a limit order. All of this what we discussed just before this. Bracket order gives you a privilege of setting the target as well as the stop loss in the single order. Next comes market depth. So I think at this point of time, I won't be able to show you the market depth of this, but I'll still try. Yeah, this is the market depth. So you can see there's still some buy orders. So bid is basically the buying, people are trying to buy this, and sell is basically the people who are offering this particular share to sell. है ना? And so this is called market depth. If the buyers are more in the market and the sellers are less in the market, like you can see from you can see full calculations of bid and ask. So if the pressure of either of this is more, you can just see the stock going into that particular direction. Simple. and the bid price is basically the price buyers are willing to pay. Obviously, it'll be less, and the ask price because you want to buy at a low price anything. And for ask price, something got executed, and Reliance share got like it at this price. I actually bought this share, because it is a CNC, and because of this aftermarket closing session, it got triggered at this particular price. There was some bias of it, okay, market depth, even at this particular time. This is the last ending session. So ask price is the price sellers are willing to accept it. So what sellers are willing to accept the price, it will be always more than the bid price. Why? Because you want to sell high, you want to buy low. Simple. है ना? Second, what are the corporate actions that we encounter in day-to-day life? That what are the things that companies do, and how market reacts in all these particular situations? So first is dividends. Imagine dividends in like a company makes money. Yesterday I was giving you the textile example. I listed my company on the stock market. It's trading, and my company, for example, my company's market capitalization became 1,000 crore rupees. Still, I'm a small cap company. So, and yesterday I figured it out that what are small caps, mid caps, large caps. So before this, like I was not able to figure out what are the particular definitions, what are the range behind all of them. But a company having market capitalization of more than 20,000 crore is called large cap company. A company having market capitalization of 5,000 crore to 20,000 crore is mid cap company, and a company having less than 5,000 crores of market capitalization is a small cap company. Small cap is also called micro cap. Again, back to the topic, dividends. So, my textile company made a profit of like my market capitalization became 1,000 crore rupees. Okay, with all luck. And I made on the same year, I made 100 crore rupees of profit, and my revenues were up by 700 crore rupees. So that 100 crore rupees of profit, what I intend to do is whatever numbers of share existed for my company, I divided into the public and holding with me. I tried to divide that, like, I don't have any intention of putting that 100 crores of profit back into my business. There's no expansion plan as of now. This year, I don't have any expansion plan, and I want that profit uh, give back to the shareholders. So that is called dividends. There are very high paying dividend companies in the stock markets, and people can actually make a living out of dividends. Like Warren Buffett, as I was mentioning in the previous video, that he is getting like $1 billion just by dividends. And what dividend yields, like dividend yield is always calculated on the face value of the share. If the face value of the share is 10 rupees, and the company and the stock price of that particular company is 100 rupees, and it issues a dividend of rupee 1, that will be how much? That will be 10% dividend, 10% dividend declaration by the company. One is 10% of 10 rupees face value. Okay. So next comes is and Infosys declared a dividend of 42 rupees per share in 2012 to 2013. So that is the amount of people give Vedanta Limited, and there are this IOCL. There are companies which give very high dividend, and you can make a living out of dividends as well if you have plenty of money and you can just put all your money into dividend shares. What is bonus issue? A bonus issue involves giving additional shares to existing shareholders. It is a way to reward shareholders without paying out cash. So, if a company issues one bonus share for every two shares held, a shareholder with 100 shares would receive 50 additional shares. So, what does that mean is like the company is not giving free shares. Basically the price of the share just reduces whatever is the ratio that the company is issuing the bonus share. It is basically to lower the stock price, because a very high stock price won't involve much retail investors to invest in the stock. For example, MRF, we like or normal people like us cannot buy MRF shares because the price of MRF is somewhere around 1,50,000. If a company that company issues 1:150 bonus share, then we will be able to buy MRF share, because that then in that case, like the stock price will be what, 1,000 rupees, so 1,000 rupees for 150. So 1,000 rupees MRF, obviously everyone will be willing to buy that share. But the company, but one way of telling all this is that MRF doesn't want, the kind of investors that will hesitate to buy or sell that particular stock. So because a person who's putting 1,50,000 for a particular share will be obviously loyal. Okay, you won't sell it like easily, but a person holding share of 100, 200, 300 rupees in crores of quantities, lakhs of quantities, like he won't be thinking twice about buying and selling the share. That is the thing. So maybe the otherwise, okay, it just shows that how much of a loyal person you are when you're holding big amount of money ka share. Bajaj Finance, Asian Paints is not that much, but yeah, 3,000, 5,000, 10,000, 10, 25,000 Page Industries. So these kind of shares, like not normal people can own. Next, stock split. Same as bonus issue, but like the stock split is not that like bonus issues is the company dividing. A stock split increases the number of shares while reducing the price per share proportionally. It's the same for bonus issue, I'm not wrong. Improves liquidity and market the stock price more affordable for small investors. So it's same as bonus issue. In a 2-for-1 split, a shareholder with 100 shares at 100 rupees each will have 200 shares at 50 rupees each. So, like, it's not like someone is giving you free shares. It's just that the stock price is going to reduce. Rights issue. A right issue allows existing shareholders to buy additional shares at discount. So, for example, a company raises fresh capital for the company. It goes for FPO. So, FPO is follow on public order. Uh, Basically, a company is it's trying to sell more shareholding to the retailers. So, in that way, it is issuing the right, like it is basically issuing right issue. Shareholders can choose to buy new share, and what companies does is like they obviously, for example, the stock price of a company is 500 rupees. They will try to list that particular stock at 450 rupees or 400 rupees. It will be like 100% lower than the amount of LTP, the last traded price of the stock. A company offers one new share for every share held at a 20% discount. Yeah, basically it is at a discounted price, so it's good for people. So they can buy it they can get a good deal at a discounted price. Buyback of shares. Sometimes what I was telling about my textile business, the companies, for example, that 100 crores of profit I made, for example, I diluted my 60% of the company. If you want to list a company into stock market, you need to dilute at least 25% of your company. So in my case, I have diluted 60% of the company. So still I can buy 15% more. So I put my profits behind like again into the markets, and I bought the shares from the public that I want to have 5% more of my company. I'm having enough confidence that the company will do the best. So it reduces the number of outstanding shares that are available to public for publicly trading, and it indicates that the company's confidence in its future own prospects. So example, a company buy back share worth rupees 1 crore from the open market. That is a very good news. And recently Wipro bought like the shares back. They bought back the shares. Next, so here comes to the next module of our journey. This is technical analysis. In this, we are going to understand chart patterns. What like now we know that why there is a need to, who are the regulations, how can I do this? Now comes like how will I be able to, punch the transactions? But now comes what are the transactions to do? So how you can make that point of view. So there are two ways to do that actually. One is called technical analysis, and the other one is called fundamental analysis. So I'll talk about everything. Technical analysis, it's research technique to identify trading opportunities based on market participant section. So what I'm trying to tell you, it'll be just price. So what basically defines a particular thing is just the price of it, be it a car, any kind of material. The stock has the same thing. You can just look at the stock price, and you see the stock price on a larger time frame, and you can see how the company is performing overall. Why am I saying this? because like you don't even get to know at the fundamentals level that how the company is performing, how is the management level that good of a technical like it is actually better than fundamental analysis. I don't want to get into the debate, but for me, uh, definitely technical analysis is better. And for traders as well, you don't need to know why this particular thing happened, you just need to know how it happened. Okay. So comparing fundamental analysis and technical analysis using the food vendor analogy. So let's take an example. In this particular example, what I'll show you, ki, I went to Japan, okay, and I don't know, and like I visited 2 3 days there, and in the night, like I was feeling hungry, and I saw 50 shops in front of me, and I want to have something to eat, but I'm not able to because there are so many different dishes, and I don't even know the names of the dishes. So one way of deciding that which shop to go is try and taste all the 50 different shops, or like I'll be just lazy testing for the 2 5 shops, and then okay, like okay, my stomach is filled and I'm going to bed. But the thing is, uh, I want to get the best. Okay, so how will I be able to judge that decision that which particular shop should I go? I will be able to, make that decision on the basis of where if there is, you know, a bigger crowd on some or the other food shop compared to the rest of them, I can just make my decision that okay, this is the shop who's most attractive among all of them, so I can just go to that particular shop. So in this scenario, I was able to compare how I was able to compare different shops. I was just able to compare it with one factor that if there are more customers for a particular shop, that means their food is amazing. But obviously that is not true always. But what are the key points? Because majority of the people can be wrong sometimes. Okay, so key points. So the market trends, stock charts, patterns within charts. So in this particular stock markets, you can just see that particular factor. In case of the food shop, it was about customers, and this it is about price. You need to understand how the price moves up and down. You can just look at the price and see how, like, is it a good buy or is it a bad buy. And about fundamental analysis, it is researching companies thoroughly. So what I'm trying to say, like how is the cash flow going on? Like how much the company is, dealing with the cash, investing activity, operation activity, financing activity, how they're using the balance sheet, how they're using, like how many assets are there, what are the liabilities for the company, what is the P&L, what is the profits, what is the gross profit, net profit, long-term debt, short-term debt, current assets, non-current assets. So these are the things that you look at. Fundamental analysis, it's the hardcore things. How many buildings, land, machinery, plants does the company own? That you look at in the fundamental analysis before judging a company. And the technical analysis, I don't even know the company. I can just look at the chart and okay, like okay, it's a good company. The market capitalization is this much. Okay, the company has been doing great from past 20 years. The stock price is going up. I can just assume that okay, this is a good company. This is called technical analysis. Setting expectations. So, what is setting expectations? So, best short-term trades, and there are return per trade, and its holding period and risk management. So, best used for short-term trades, not for long-term investments. Technical analysis is not used for putting. You can just not predict the chart patterns based on larger time frames, and you can see okay, from here it's going to go there, but with the help of fundamentals you can actually do that. So what are the return per trade? So expect small but consistent profit. On an average, Nifty gave 14 to 15% CAGR from last 15 to 20 years of 20 to 30 years of existence. So we should not expect a return more than more, like we should not expect a return okay, I'll make 50% here, okay, 25 30% here. you should always try to beat the returns of average Nifty 50 14 15 more than 14-15%. And you can just set it as a benchmark. Whatever you do, invest, trade in all kinds of investments, you can just set your expectation very realistically, because this 14% 15% is still too much. But if you are expecting a larger than this, then like for example uh, this technologies of this Jim Simons Renaissance technology, it made a CAGR of 66%. Yes, like it's a good hedge fund, and $23 billion was the net worth when Jim Simons died, and he died recently. But he was able to make that kind of crazy return. Obviously, I'm not telling you that you should not expect much, like expect returns like 100 200 it's possible, but it's very exceptional that these returns, I think no one is able to beat that kind of return. 66% CAGR. I don't know what that guy did. So next is holding period. Trades can last from a few minutes to a few weeks. So in trades, you have to, you can't look at the monthly time frame or the weekly time frame in order to make your decisions. You have to look at very a trade should last from a few days to a few weeks to a month, like to a few months, not more than that. So you need to set your expectation in such a way that how long you can hold a particular trade. There can be full like positional trades in case of long terms, that there can be swing trades. So positional trades is for longer time period. You are having 5 years, 10 years down the line, okay, you are believing that this company is going to do good, and you are putting a bet like that. In shorter time period, for example, in positional swing trades. So swing trades basically last for some months, some couple of months. And in case of intraday trade, it lasts for, just I was giving you the example, that it will last a day. For in BTST, buy today, sell tomorrow, it can last a few months. So you need to have all these different kinds of frames understanding, and you need to know that which suits you well. If you are able to, look at the markets every day and you can do the transactions very quickly, intraday suits your personality. You should be able to know which kind. If you have enough patience and you don't want to, get into all of that daily ka hectic, you can just research about a company, and you don't even need to look at the stock price, because if you have enough confidence about a particular company, then whatever price the company is trading at, you don't even have to look about, because your mindset is for the next 10 years. So that is called positional trades. For swing trades, for example, from last 5 years, HDFC Bank was moving in a particular range. Still, it didn't break the range, but it was moving from 1400 to 1700. So people can take positional trades. When it comes to 1400, I'll show you the chart pattern honestly. I'll go to HDFC Bank, add into the watch list, and yes. So these are the multiple time frames that is available for an investor trader. On a daily time frame, I'll just go to weekly time frame to get a bigger picture. So yeah, see this. Okay, I don't have to go. So yeah, so far yes, from 2020. I'll just go from here. I'll just put alt H, and here also alt H. So you can see the stock is trading in some kind of range. Okay, so a positional trader, what he would, buy, he knows that, okay, the stock is always taking a support at 1400 levels, and it is, coming down from 1700 levels. So he can just, make a buy at this particular price. A positional trader would enter on 11th July 2022, hold this particular stock for another, a year, next April, and as soon as the 1700 targets come, you will just exit the trade again. Like, and what the other guy can do, the one who's having that, okay, now the stock has came to a level of 1700. now it's going to go down, so he can just take a sell trade here, and he just have he just has to wait for like next 2 3 months. The stock went down, again it went up, sell, buy. So this is called positional. This is swing trades. Huh. Next is intraday trade. So what happened today? I'll show you. So we can see, okay, this stock has moved up. I'm just putting a daily time frame just to analyze. Okay, this stock is moving up from last couple of days. I'll just put a 15 minutes time frame. And what we see today is that today intraday trade, right? So the stock was obviously hitting its all-time high, है ना? So we saw from the swing trade wala logic that as soon as it will come to 1700 levels, it will the ones who are having a pessimistic approach will obviously say, okay, from now it's going to go down. It's not about pessimistic approach. It's just he's analyzing the data and he's telling, okay, from here it's going to go down. And he would have put his bet here somewhere around. But look at the trade today, 9:15 candle. So at this particular level, you would have sold this particular stock, and from 1744, it came down to somewhere around 727. So this is called intraday trade. You are having a very short term view. You want to make financial gain within a day, and then you make a position accordingly because it's a big red candle. Obviously, the stock is gap down. So now you're putting a trade of shorting the stock, and you're putting the targets somewhere around the previous close, and you obviously got the uh, target. So this is called intraday trades. Coming back, so what are the key takeaways? You have to develop a point of view that what you are going to do in the markets. You have to identify what are the entry, what are the exit points in this trade. What was the entry for me? If I'm a buyer, I'll just buy at 1400 levels. I'll just exit at 1700s. Again, it'll come to buy 1400, buy, sell, buy, sell. So I have a very clear point of view where I'm going to enter, where I'm going to exit. When I'm doing, swing trades, when I'm long term, okay, I know this stock is at roughly this price. I have 10 years ka view. I can just, hold this stock forever. Intraday, I want to exit if my particular target come 10, 20 points, 50 points, 100 points in index or any kind of share. So you and visualize market actions using stock charts. So the platform I was using right now was our partner broker Allies Blue, but you can use TradingView. It's a good platform. You can see charts, analyze, but there are not a lot there. You cannot add a lot of indicators. Sorry, there you cannot add a lot of indicators on TradingView, but surely you can do in any kind of broker. It gives you access to putting multiple indicators. So, and understand and keep core assumptions in perspective. So what you need to have expectations every year. God, I'll make only 20 to 30, like 20. If I beat the Nifty 50 returns, I'm very happy. If I'm able to do very good in that, it's very good. But you need to set your expectations very realistically. That's what I'm trying to say. Don't expect, okay, I'm going to go super rich in 2 3 months. I'm going to make a hell lot of money and then go out of the market. The ones who have made a lot of wealth in this market is the one who sustained for a very long time. So you just need to concentrate on being in the market for a very long time, and automatically your skills will improve with time. That's what my point of view is. So application on asset types, uh, applicable to any asset class. So what in technical analysis, it needs historical data. The stock needs to be in existence from some 5 10 years. Then we'll be able to judge that particular stock with the help of just price pattern. So this particular chart pattern, what we were using right now was candlestick, and I'll tell you what everything, all this candlestick line chart, what are the use, why we use this about in the coming classes, and learning analogy. Driving a car, it's similar learning curve and practice. So it's the type of technical analysis, like you just need to have some experience in technical analysis, and with time you will be able to get through it, and you will be, and if you practice it a lot, where you see different chart patterns, and don't restrict yourself onto a particular asset, onto a particular stock. You have to, explore different type of chart patterns that exist, be it crude oil, be it gold, be it cryptos, that how markets work across. And definitely, there's one thing: the history tends to repeat itself, and it's so much true. In the case of panic scenario, the markets crash like anything. Even if it is 21st century, people have the same emotions. The history repeats itself because we have the same emotions from then, and actually the emotions have worsened with time. So you don't have to worry about why this particular pattern will take place, because the pattern is going to repeat. And the example of different asset classes, be it equities, commodities, sugar, this, wheat, you can actually trade in anything from, in this particular uh, generation. Honestly, forex, fixed incomes, you can trade in bonds, you can trade in other debt instruments as well. Key assumptions in technical analysis: price reflects all information. Market prices incorporates all known information. Why is it like that? Because, like, how is the key management? What is the scenario behind the company? How the company is performing? Because if a bad news comes, the stock price is going to go down. So you don't even have to look about to the bad news. You can just look at the stock price and say, okay, there's something bad going on. Let's look back in at our favorite HDFC bank. And Hannah, it's not favorite. I was joking. So this stock price, it was somewhere around here. Yes, I think, yeah, big crash. Yes. So the stock was roughly trading at some 1700 levels. Okay. Everyone was thinking, damn, this is a really good run, good bull run. This time it's going to, beat the 1700 level, and it's going to go up like 50% up. But obviously, a bad news came, and on 17th January it crashed. I'll tell you how much percentage it crashed from that level. It almost crashed 15%. So, and 15%, it's not small, to be honest. It's the India's biggest bank. So why? So I don't even know what was the bad news. I just know that there's something going bad in the company, but I'll tell you the news as well. So the HDFC Bank reported, the net profit margin decreased because HDFC and HDFC Bank collaborate. They made into a single company, the collision, right? Merger, sorry, merger. So HDFC and HDFC Bank merged, and in the next quarter, like, they resulted in the less net profit margin. Their market capitalization, like, increased drastically, but not with their profits. And because of this bad news, the stock price crashed. So you can just look at the charts. Charts are defined. Charts are telling the story. It's screaming the story out. You just need to get to. You just have to get that knowledge, that why this particular pattern is going on. Why there's something. What is going on in this particular stock? And if you would be, a true investor, like Varad, he bought this stock, he bought this stock so heavily at this particular price range, 1400, 1500 rupees, and now he's sitting at profits and he's laughing. You know. So you need to be very loyal. Investments requires you to be very loyal to your particular share, and when you get a price that, okay, something is running at a discount, you just need to buy that particular thing. Now we'll look at next. Focus on the how is more important than why. Okay, that was I was telling. Technical analysis prioritize price movements over any underlying reasons. Price defines everything, and I'll give you another example. I like giving examples. Right, but it's so in this scenario, we'll take Nifty. Okay, I remember at this particular time, the stock markets rallied like anything. What was the scenario behind all of this? I'll just search about the election result, the state election result of So it okay, it's coming in Hindi. I don't know. Yeah. Okay, hush. Yeah. So on December of 2023, we'll look at the chart patterns. Okay, December of 2023. This is the time when BJP won into three big states: Chhattisgarh, Madhya Pradesh, and Rajasthan. And from, you can see the December 2023, the stock markets rally like it's not stopping. So why this is a particular scenario? Because like before this, like the market was consolidating at this particular level heavily, and all sort of bad news was coming into the economy. But at this moment, at this December ka movement, when people realized, okay, because state election result were necessary, because in 2024 recently BJP came into power. Okay, but at this particular scenario, because markets like stabilization in the economy and a stable government, the same government, if it is going if it is going to rule again and again, it gives power to if it gives some kind of uh, trust to the people that the policies are not going to change, and whatever the government is running its projects, all its rules and regulations around the states, it's not going to change, and there is a chance that it can win the 2024 election as well. So from here the markets moved up. So that was the story of Nifty 50. You can just look at the price movements and you can just see what is the particular scenario, why our markets are rallying, how a particular company is performing, and price defines everything. So technical analysis is much deeper, and history tends to repeat itself, obviously. The chart types. Now we'll come at why we are using all these candlestick patterns and the chart in the chart type section. So it is a various graphical representation of price movements over time is just chart types. So what are the types of charts available to us? I'll show you: line chart, bar chart, candlestick charts. So this what I'm using is just candlestick chart pattern, and I'll just go to line chart and we will try to visualize it together that what it is exactly. Here in the section you can just see that, okay, I just want a line chart, so it just takes the closing price of it, you know close, because in in today, what happened today, nifty pay, we'll just look at what happened today with the help of candlestick pattern, and then I'll show you why candlestick patterns is among the best and why people use it. So today, there was 0.06, if you can see here exactly, there was negative, like the market opened at 369 and it closed at 302. So there was a slightly red candle. Okay, so it didn't move up. Are you able to see this analysis in just this particular line? No, even it is of the same 4th July, because the line chart is only giving you a single price, that is closing price. So because of this limitation, you are not able to visualize full information clearly that, okay, at what price the markets opened today, what was the today's high, what was the today's low, where did it closed. So all these informations, why is it necessary for us? Because in order to predict that, okay, if the markets were, if open was equals to low today, that means at a price when markets opened, the market didn't go any lower to that particular price. That means there was enough movement, strong movement throughout the day. So that's why you can just see the candlestick patterns, and you will be able to predict that, what sort of today's market sentiments, what is the sentiment of the market, and what can be the movement today. Another chart pattern is bar chart, and there will be a bar chart here, but simply visualize it. Simply just bar chart is simply just rectangles. So rectangles won't be able to define it, because rectangles will be able to give just you know two. It will be able to just showcase two prices. Either it'll be able to showcase open or close, or high or low. It won't be able to showcase us four prices, because in a daily scenario, imagine you going to APMC Mandi in Hindi. So and you are trying to buy wheat. You are trying to buy wheat, 5 quintals of wheat, and you went into the market in the morning itself, 8 a.m. and you encounter that the first there will be continuous bidding. So you encounter that, okay, the opening price of wheat is somewhere around 2300 rupees per quintal, and in the middle of the session, at 12 or something in the afternoon, the price shoot up to 2500 2600 level, because there was not enough supply for the wheat that day, today, and there were not enough suppliers. There were not even enough suppliers, and there was so much buying. So because of more demand, less supply, the price was up by 2500, 2600 at 12 o'clock. So open at 2300, high 2600. Then the other scenario, at 2 p.m. or something, there were enough sellers because of this news. Okay, the wheat is selling at 2500, 2600. Like, all the sellers came to the market, and there was not enough buyers. They're like, okay, this is heavily priced, so we are not going to buy it. So the price dropped to 1800 level. So the same quintal from 2300 to 2600 to 1800. Then at the end of the day, at 4 or at 4 p.m. or something, the closing price, the last price that someone wants to buy wheat in the market using bidding, was, imagine, 2350. So it was for the full day, the movement was just for 50 rupees if you look at the pattern from opening to closing. But will you be able to give all the information? But you are not able to give the information how high the price of wheat went into a particular day, how low the price of wheat went into a particular day. This type of problem is solved by candlestick pattern. So in this, you can see there is a line as well as a bar. So it's a combination of line as well as bar. And in this particular candlestick pattern, you can see my screen from here, and there is opening price 22614. So the markets opened at 2200 614. The markets closed at 22,967. It made a high of 22,000. It went full high here, and it went full low here. So these are the four piece of information that is available to us from just a single chart pattern, and it's a daily time frame. You can see D here. So on this 23rd May, the market moved 1.64% up. So candlestick pattern gives you much more information in a very compiled, like in a very compressed manner. So that's why candlestick pattern is the most preferred chart pattern that anyone use in markets, at least as far as I know. Uh, Next, we'll go to yeah. I told you about line charts, candlestick charts, bar charts, OHLC, open high, low close. Okay. Getting started with candlesticks. Okay, so again, Varad has messed up this PPT, Introduction to Candlesticks. Historical significance. This thing, I don't know. Japanese rice trading. Okay, it started when this particular candlestick pattern started in 1700, when this Japanese rice trader started visualizing that how he can represent the overall movement of the market, as I was giving you the wheat example. So that was the basic structure. He came like a green candle shows that the market opened at a lower price, but it had closed at a higher price. So overall, the movement was positive. If it opens at a price, and it close below that opening price, so it makes a red candle, so the price actually moved down today. And the wicks, you can see these are called wicks. So this particular price opened at this particular price, it went to up here, that this is the Deka high, but it ended up closing here. Or it can be this, okay, it opened here, it went to a low, but it again went up, it again went up full high, and it closed here. So it can be any scenario. Same with this, it opened at this price, maybe it went to full high, but then, like, because of the selling pressure, it moved full low, but at the end of the day, it was, yeah, lower than the opening price, so it is a red candle. So the body represents the open and close. This is the body, and the wicks, the shadows, represent the high and low. So what are the some of the patterns? Doji is indecision. Like imagine a rectangle and small wicks around. So this, like, it's not this particular diagram won't be able to depict much. I'll just show you how it looks. But this particular diagram would be able to give you a clear representation. Hammer, hanging man, engulfing patterns, spinning tops, shooting star, piercing pattern. You don't get into the names of it. It'll be super confusing if you try to do all of this. But I'll just show you with the live practical examples that how you can just what are the psychology behind all of these. The candlestick is frame, like the pattern is framing because of the market ka sentiments, and you can just look at the sentiments and you derive the psychology of how this particular thing is being traded in the market. What are the sentiments of general public? What are the expectations? So first, choosing time frame aligned with trading strategy. So if you're an intraday trader, you have to choose, 1 day time frame or 15 minutes or 30 minutes or 5 minutes. So that is, so it will give you, clearer picture. So in this case, if I will go at a 5 minute chart of Nifty 50, there are so many, this doji. But if you look at, so at a very granular level, you will be able to see what are the stock movements when you're an intraday trader, when you have to buy, when you have to sell, when you have to buy, when you have to sell. So a time frame will help you in determining what is your objective first. Choose your objective, who you are, and then choose a time frame, a 5 minute, 30 minute, 15 minute. Okay. And look at the doji. This is doji, just indecision pattern. There are a lot of dojis. Full dojis. This is doji. Okay. So doji will not give you a clearer picture where the price is going to go. And in the larger time frame, you can just, if you're a long-term investor, long-term, so you can just look at the monthly pattern. Okay, the Nifty is going on a monthly chart full up. I'm going to go, I'm going to go long into Nifty. You can just buy Nifty ETF, Nifty Bs, and same with Bank Nifty or any kind of stock, be it Reliance, Reliance name many times, REC. It's REC. REC is into full news. Huh? From monthly chart, you can just look at the, if you're an investor, you can just look at the monthly chart and see that, okay, this particular stock broke this resistance level and it moved full up. So you can, like, for an investing perspective, it can be a good chart pattern, honestly. And single versus multiple candlestick. In this particular module, we'll just stick, to just single candlestick pattern because it'll be too much confusing for you guys. And what are the risk management, entry and exit points? What are contextual analysis, importance of considering overall market trends? So we'll show. I forgot the yeah, Tata Motors. Second. Yes, I'll just look. I'll just go to daily time frame and I'll just go to Tata Motors. Okay, come on. I think it's not able to load. Tata Motors. Hmm. Let's start with what happened today. Okay, what is the importance of these multiple time frames? I'll tell you, and we'll try to derive a point of view in this. On a 5 minute time frame, you can see that the stock is full bullish. Hana? So you can see, okay, I can go buy on this stock. Wait, we'll look at 15 minutes. Like, okay, it moved up, but it went down. Again, it moved up, it went down. Again, it moved up. So there is not clearer picture, you're able to derive on a 15-minute time frame, but on a 5 minutes, okay, it's full was going up. Let's see on a daily time frame. Remember, we had a bullish view on a 5 minutes time frame. Look at this. In daily time frame, this stock is moving into a particular range. So it moves down, it goes up, goes down, goes up, goes down, again goes down, again goes up, goes down, goes up. So again, it's time for it to go down, right? According to this, but on a 5 minutes and 15 minutes daily intraday time frame, that we will be able to say, okay, it's going to go up. On daily time frame, it is telling it's going to go down. Let's look at weekly. Okay, on a weekly time frame, it is telling that it is going to go up from your 435 levels straight up to 998. So the weekly levels, like, so again, our daily analysis was telling us that okay, it is going to go down, but now our weekly is telling that okay, it is going to go up. Let's look at monthly. Look at this. So in weekly time frame, it is suggesting that the stock is going to go up, but in monthly again, it is suggesting us that okay, after touching at this particular price level, it's going to go down. So this is why you need to have a larger time frame picture. You should look at the monthly chart, then you should move to the granular level and monthly, weekly, daily, and then you should make your perspective that okay, what is happening on a larger time frame and then what is happening on a smaller time frame. You cannot just give your point of view looking at the smaller time frame, and the Nifty went full up from the last 20, 25, 30 years of existence. uh, Tata Motors from its existence, went up, down, up, down, up, down. So now you can just say that okay, at coming at this particular level, maybe it's going to go down. You cannot just look at the 5 minute chart pattern weekly, daily, and just give your point of view. You need to look at all the different time frames. That is what I was trying to tell. And yes, single candlestick pattern. So doji, it'll be a small body. Open and close price are the same almost. Like it'll be very, so the doji. There are a lot of dojis, monthly dojis. Think it won't be there. Yeah, this open and close. There is not much difference in the open and closing price, and there are shadows like in both the sides. So this is called doji pattern. है ना? Because it's an indecision. Just looking at this candlestick pattern, will you be able to tell something about this stock? No. That in the next month where it's going to go? Definitely not. It can be green or it can be red. Doji is for both the colors. Okay. Small body with long shadows. Spinning tops is small. It's having small bodies with long shadows indicate indecision. Again, spinning top is the same as doji. Just the shadows are much bigger. You know, where we can find in Tata Motors. Like I'll look at this weekly time frame. Mm, yes, look at these shadows. These shadows are much bigger compared to the bar chart. This is called spinning tops. Again, it's an indecision candle. You won't be able to take any decision just seeing this particular candlestick pattern. Next comes so doji and this particular type spinning top. It won't make any sense all this looking at all this candlestick pattern. Now we will go to Marubozu. So Marubozu is basically, there is no shadows. There is no shadows on either side, even it is a buying or it's a selling candle. And a Marubozu represents a strong bullish or a bearish scenario. If the opening price of this particular candle was somewhere here, the opening price was here, and the closing was there, and I'll look at example. So then then it was a full bullish scenario. A Marubozu, like you just ignore the small shadows. The open is equals to like it's almost nearer to the low, and the open low is equals to the closing high. So this represents, so it's a green candle. It represents a strong bullish pattern. So after this, you can just predict that the stock will move up. It gave a return from this particular stock, almost 11-12% return in 1, 2, 3, 4 months. 12% could return 3% per month. No. So annually it's 36%, but obviously you're not going to get it. Uh, so Marvus and on red on a just you just understood this logic, right? If it's a bullish Marubozu, the trend is going to go up. If it's a bearish Marubozu, no, it's not. The trend is going to go down. Okay. Next type of candlestick patterns is hammer and hanging man. So hammer and hanging man is, you can just look at this particular diagrams. This is the open, this is the close. Okay. So this made a green, like a bullish hammer pattern, like, and it's a hanging man. So the open was here, the closing was here, but this both are the same pattern. The hammer small body with long lower shadow appears in downtrend, so it will give a sign of reversal when this okay. Huh. This hammer represent a strong bullish when this particular strong when this was a full downtrend. The chart pattern you can see here, the hammer appeared and after that the stock moved full up. So on a downward trend, when a hammer appears, you can just look, the trend reversed and the stock or the asset went up. In the case of hanging man, that stock was up. The stock, okay, the trend was full up. And I think I missed something. Yes. Uh, Yeah. So just understand this, that in the case of hanging man, the movement is full up, and this hanging man appears on the top. After that, hanging man, it is again the sign of trend reversal, and the stock or that particular asset is going to go down. So that is about hanging man. Next is about shooting star. So just reverse the hammer and then it is your shooting star. So again, shooting star is also same as hammer in the way that it also signifies trend reversal. Shooting star, a small body with a long upper shadow appears in uptrend, indicates potential reversal. So this is a green candle that appeared after a full bullish trend. Then after this particular shooting star appears, the trend has reversed. In case of inverted hammer, so it's the same candle, just the color of it is red. In a downward trend, when inverted hammer appears, the strong again gives a reverse. The This chart pattern gives a reversal. It tells us that the pattern is going to reverse and the uh, price went up. So it's a inverted hammer. So, in today's video, what we explored is about the key aspects of trading, technical analysis, single candlestick pattern. Understanding these concepts is crucial for making informed trading decisions and developing effective strategies. So, I think you must be, getting confused in the last particular section about hammer or inverted hammer. So, it's not big of a deal. When a hammer appears, it's just, yeah, hammer or inverted hammer. It just shows us the trend reversal ka thing. And I will, like, in the next coming videos, we will, like, I will take you deep into the trading perspective, and we will together figure out how these particular candlestick patterns work actually in the market. Just understanding the theory won't be enough. But understand, there will be a bar chart at the top, a shadow at the down, or a bar chart at the bottom, and the shadow at the top. So and the shadow size will be double the bar chart ka pattern. So there's a big shadow and a small bar chart. That is called hammer. And I think Marubozu was very clear that a strong, you know, open and close was equal to high and low. So open equals to low or open equals to high was equal to great, like closing equals to high or closing equals to low. So these things is called Marubozu, and in hammer that there is a trend reversal on And it depends on the time frame, monthly, weekly, what type of thing you are doing. You if you're doing options, if you're doing futures, if you're doing just investing, or you're doing some positional trades. So it depends on all of these chart patterns that you have to identify these patterns, and then you have to make decisions accordingly. Remember, successful trading involves continuous learning. So, starting with me, like starting with my journey from past 4 years, like what I've been, trying to learn, and still I'm learning. And I think for the rest of my life, I'll be learning in the markets because the markets are evolving every day, every second. Not even Indian markets like crypto, forex, everything. Like there is a very strong move of algorithms nowadays. There are a lot of wicks you can see on the indexes as well. So there are trillions of dollars come movement all over forex. It's almost 70 to 80% algorithm. So we have to continuously learn in order to beat these algorithms as well. It's very much possible, believe me. Utilize the insights from candlestick patterns to enhance your trading skill and always stay informed about market trends. And on the last note, I would like to tell you that thank you very much for your attention, and like I'll stay tuned. We'll be covering all the key concepts in the later section of this video series, and thank you for watching.